Good afternoon, everyone, and welcome to the Northwest Illinois Economic Development presentation on COVID-19 resources. For this, we'll mostly be focusing on businesses with less than 500 employees and nonprofits with less than 500 employees, since that's where I've been seeing the need and the questions coming in. Today, we will be focusing on finding out which resource is right for you. While there's a variety of programs out there, not every program is right for every business, and that's something that I found out while helping many of you, some of you who are on this call. So I just want to guide it. Northwest Illinois does not offer legal advice, and we do want to, while we may suggest things, in the end, the decision to apply or not to apply for any of these programs is entirely in your hands, and we highly recommend speaking with your legal or financial teams, whoever those may be, before you make any significant decisions. So with this, I am going to share my screen with you, and we're going to get started. Also, thank you, Diane. I'm going to mute you all, and then if you have a question, put it in the chat, and then I'll unmute you all when it's time for questioning. That is a wonderful suggestion. Yes. Okay. Share screen. All right. And let's go full screen. Good morning, everyone. Good afternoon, everyone, and welcome to the COVID-19 resources. Which one is right for you? It is Tuesday, April 7th, 2020, and we're responding to the shelter in place during the COVID-19 situation. So just a quick overview of what we're going over today. There are several different federal and state programs out there for financial assistance. We'll be focusing on nonprofits and small businesses primarily. We're going to talk about what types of programs we have, and then how you can choose the right options for you and your company. Again, a major disclaimer: Northwest Illinois Economic Development does not offer legal or accounting advice. We highly recommend speaking with your accountant or legal counsel before making any significant financial decisions, and we are not responsible for any decisions you may make with our advice. So before you look into any programs, you want to get a good sense of your business. So what industry sector are you? Are you retail? Are you service? Are you accounting? This is all important information. You'll also want to look at what type of company you are according to your legal documents. Are you an LLC? Are you an S-Corp? Maybe you're an independent contractor, 501c3 nonprofit, or sole proprietor. All of these things will influence what programs you're eligible for. You'll also want to look at the number of employees you have on hand, and this includes yourself for most programs, because that will determine eligibility, your average monthly revenue and payroll. For this, they typically want back to February or March of 2019. However, if you are a startup and you started after March of 2019, they want you to look at the first 2 months of 2020. So your revenue statements and your payroll for January and February of this year. Other factors that will play into consideration with some of these programs could be: are you women or minority owned? And do you get 33% of your revenue from gambling? This includes video gambling. So the federal government isn't a big fan of gambling. They're kind of puritanical. They basically say that if you have 33% or more of your annual revenue from gambling, and this could be the typical slot machines you see at a casino or the video gambling we see in a lot of our bars, it means you're not eligible for these programs. So if this is you, we'll need to look at some other options. You'll also want to have a few things on hand. So commonly requested things include a copy of your business license, a copy of your most recent tax returns and revenue statements. This could be for your 2018 tax returns or your 2019 tax returns if you have that, and then monthly revenue statements for January, February of 2020, and as many bank statements as you have. You'll also want your payroll records back to March 2019 or January 1st, 2020, such as IRS Form 9401. They want to verify that you need the help. They want to verify how many employees you have, and tax statements seem to be the most reliable form to do this. Then other financial records, depending on what kind of business you are and what kind of assistance you're having. But before you apply for anything, at bare minimum, I would have a copy of each of these things on hand. And if you don't have a copy of them, I would call your bookkeeper, call your accountant, and get one of these as soon as possible. Is anyone sitting needing to be let in? All right, where? Okay, getting ahead of myself. Finally, before we dig into more things, I want to just review the definition of working capital. So this is really important, as most funding sources restrict the use of their money to working capital, whether they be a grant program or a loan program. Working capital is also known as operating expenses, and this is typically defined most generally across the programs that Northwest Illinois Economic Development has reviewed as payroll, mortgage interest, rent, utilities like electricity, natural gas, and water, and occasionally outstanding accounts payable. This really varies by program, but it's something to know on hand. Essentially, working capital is money you need to operate normally, not the money you would use to expand. This money, whatever you get, is not meant for expansion. It's meant to keep you open. So, what kind of help are you looking for? In general, there are 4 different types of programs that I'm seeing being offered right now. There are grants, which is money that you don't have to pay back whatsoever. There are loans, which is money you have to pay back with interest. There are forgivable loans, which is money that you have to pay back unless you meet a few certain conditions. And then there's also technical support. While this isn't money per se, this could be technical assistance you need to get through your business to help it stay alive or help it grow once it's over. Northwest Illinois Economic Development doesn't give out any money, but we do give technical assistance like what you're seeing today, like you've seen with our Build It, Grow It programs, and like you'll be seeing in future webinars. So, overview of grants. Unfortunately, for businesses, grants are hard to come find and qualify for. There's not many of them. The Illinois Hospitality Grant, which got with the deadline to apply was last week, was one of them, but the funds were very limited, $14 million for the entire state. Oftentimes, grants come with more conditions than loans. They're usually targeted by industry, such as a hospitality grant that went out to our bars and restaurants and hotels. They often target women-owned businesses, like a grant from the Red Backpack Fund, or another one that I shared this morning with folks. Or they're targeted specifically for nonprofits like arts organizations to keep them alive. Even during COVID-19, not many of these has changed. In addition, unlike loans, grants have more strict reporting requirements, such as the Grants Accountability and Transparency Act, which is one of the conditions with the state of Illinois. Right now, apart from the hospitality grant program, Northwest Illinois Economic Development is not really seeing any grants available for our small businesses beyond the occasional one that we post on our Facebook page. The last one we posted was the Red Backpack Grant program, which was meant to keep employees of women-owned businesses around. And this was funded by Sarah Blakely, the founder of Spanx. Loans. These are available from banks or from governments, both federal and state. Loans need to be repaid, usually with interest rates ranging from 1% to 3.75%. The ability to get loans may depend on the creditworthiness of the business or the business partner. You can be turned down for a lot of these. And depending on the source of the loans, what you use the money on may or may not come with restrictions. Typically, the more government money you're using, the more strings there are attached. Especially with government money, there's no such thing as a free lunch. So, Going into the first government loan program, we have the Paycheck Protection Program. This is a forgivable loan. You can receive up to 250% of monthly payroll expenses as defined by the following. This would include salaries, wages, and benefits, including health insurance, retirement, vacation time, and sick leave, not covered by the new CARES Act. This also includes your money that you spend on state and local employment taxes, such as unemployment insurance, the state income tax that my employer pays for me. And this does cover sole proprietors and independent contractors, equivalent of payroll as defined by 1099 or equivalent reporting. These loans are 100% forgivable as long as you spend 75% of the funds you receive on payroll. And you keep the employees around for the duration, and you don't cut wages. So, how do you get a Paycheck Protection Program loan? First of all, you apply through a bank. I highly recommend you speak to your personal business banker first. The federal government and the Small Business Administration gave this money to the banks so that they could allocate it. And it's after checking in with some of the bankers in the Northwest Illinois Economic Development community, because of the high demand for this program, many of them have paused their process of taking new loans, especially for customers that they weren't already working with. There's a lot of due diligence that needs to go with this program. But if you do apply, you can get the money within a few days. There is one client of a partner organization that got the money within 2 days, and one of the banks we've spoken with expects the people who applied for the Paycheck Protection Program on Friday to get their money as soon as the end of this week. Eligible entities for the Paycheck Protection Program include businesses with fewer than 500 employees. So it could be a restaurant that's run by the owner and 2 wait staff, or something as large as Eagle Ridge Resort in Galena. It also includes 501c3 nonprofits. Note that we didn't say 501c6. This is reserved for 501c3. Sole proprietors and independent contractors, as well as the self-employed. And this program may be combined with the Economic Injury Loan Program with limitations. With this, essentially, what it means is that if you take out an economic injury loan, you get the $10,000 up front. That $10,000 is taken away from what you can get from the Paycheck Protection Program. Forgivability with this is limited. You have to spend 75% of the funds you receive on eligible payroll expenses, as we defined earlier in this slide deck, which we will be posting online for your reference. The other 25% of your loan may only be spent on things like rent, mortgage interest, utility payments, and additional payments to tipped employees. The government is very strict. Just like you don't really want to mess with your taxes, you don't want to mess with these programs. And we highly recommend that you avoid the mixing of money from a program like this with your regular revenue, especially if you're a restaurant or another small business that is otherwise still open. I've heard from multiple bankers that if you do take out a Paycheck Protection Program loan, that you open a separate checking account specifically for the Paycheck Protection Program funds, if not a third, so that you can pay all the payroll out of one account, pay all the other expenses out of another, and you pay this by paying this out of your main bank account, and then you transfer the money from the Paycheck Protection account, only the amount that you need. Let's see. Chris has a question. Let me finish this slide and let me finish this and the economic injury disaster loan, and then we'll get to your question. All right. Let me see. Okay. If the payroll isn't maintained to 2019 levels, you will have to pay it back. While the payroll for 2019 levels is dependent on whether you're a seasonal business or not, so if you're a golf course, for example, your payroll won't be the same as a restaurant that's open year-round. But if you do not have essentially the same number of employees as you had during the equivalent period last year, or January, February of this year, if you're a small business that just opened within the past year, you will have to pay some of this money back. And the same happens if you cut your wages to your employees by 25% or more. The goal of this program, with the name Paycheck Protection Program, is to keep people employed, is to keep people off the unemployment rolls, even if they're not working. That's why they're giving you this money to pay out to people, so that we can keep them employed. All right. The other one I want to get into really quick is the economic injury disaster loan. There is up to $10,000 in grant money that does not have to be repaid that you can get before the loan is approved or denied. The interest rate is under 4%, under 3% for nonprofits defined as 501c3 or 501 veteran status. It's loans of up to $2 million or 6 months of operating expenses, whichever is less, up to 30-year term. And again, this is intended to cover working capital, payroll, mortgage interest, and outstanding accounts payable. Eligible entities include businesses with fewer than 500 employees, sole proprietors, nonprofits, and more. Some collateral requirements are required for loans above $25,000. So if you take out money above this, you basically need to promise them part of your business, maybe some of your equipment, with personal guarantees of the owners required for loans above $200,000. The nice thing about this program is that there's less stringent requirements for payroll. So if you are a business that's more capital heavy, so if your rent is higher than your payroll, for example, like many small business is in Galena might, you're better off going for the economic injury disaster loan because you don't have the strict requirements that you need to pay it on payroll. All right, I'm gonna stop sharing and take some questions. All right, Chris, what was your first question that you had for me?
Okay, thank you. My question was in regards to something you said for the PPE program versus the SBA, the economic emergency, or what have you. So for the $10,000, let's say you've applied for that, you haven't heard anything back, you haven't gotten any money, so then you go to your local bank and you go for the PPP money. Now you said that there'd be a difference, they take that $10,000 out of the equation.
If you get the full $10,000. So if you're still waiting to hear back from the SBA, and you get the PPP from your bank tomorrow, use it as an example, once you get the $10,000, I would just hold on to that in an account and make sure you're able to pay back the PPP with that $10,000. That's the $10,000 that won't be forgiven, assuming you get the full $10,000.
Okay, and so then with the PPP money, that needs to be payroll, understandably. But so let's take a restaurant, just an average restaurant. 5 servers during this time period when you're open. Do you have to bring 5 servers on, 3 on a Friday night or 4 on a Friday night to stand around when you're closed just to do carryouts?
It seems like they want people to be paid whether they're working or not. And this is one of the things that confuses me. I'm not quite sure why they did it, but they want you to get people off the unemployment rolls and onto having them make their average salary and wages.
Okay, thank you.
This PPP money can be used for tips too. So if they're not working, they would be ordinarily getting tips. You can calculate into the amount that you're asking for this program.
Okay, thank you.
If we file for unemployment before the PPP comes through, do we then go back in and cancel the unemployment? I think you would contact the unemployment agency and say that you were rehired by your thing, because they essentially want to take people off the unemployment rolls and get them back to work of some way, shape, or form. Basically, so in a normal time, if you were filing for unemployment let's say you got laid off because Honeywell moved to Mexico and you filed for unemployment initially, but then you got a job with Signcraft, you would basically tell the unemployment agency that, you know what, I don't need this anymore. I have another job. And with payroll requirements that we all have to abide by, the government should understand how to do this, and the unemployment agencies should be able to work with you on that. Any other questions before we keep moving? These are some really good ones.
Did we apply for the Emily,
Yes, Bill.
the economic injury disaster loan program?
Mhm.
That's up to 10,000?
Up to 10,000. However, the last I heard from some colleagues and from some reading I was doing last night, a lot of people aren't getting the full 10,000, especially small businesses. It seems like they're giving out about 1,000 per employee that the organization has. I think this is because they're getting an overwhelming demand that Congress, for some reason, didn't anticipate. Yeah.
So where do you go? You go to a bank, you say, for this?
A bank for the Paycheck Protection Program and the SBA website for the economic injury disaster loan.
Okay, that's the website of what again? SBA?
I sent it to you yesterday, I promise.
Oh, did you? Okay.
Yeah.
All right, I'll look at it.
Yeah, but if you guys want, I can pull it up and
No,
I
that's
can
fine.
put it in the chat. I'll send it with the follow-up. I'll send as many, if you guys all want to message me your email before the end of the day today, I will send you the slides, and these slides will also be going on Facebook for folks to review. Okay, Gloria, you have a couple of questions.
Yes. Hi, everybody. How's everybody doing?
Good.
I am enjoying the sunshine.
We're having fun now. All righty. So first of all, with the when you mentioned about the unemployment, that's been a typical question. We, of course, have been bombarded at the office. And any of you that are our clients, please know we're here to help too. And we're learning as we go and trying to jump all the hurdles.
Also,
So
this is Gloria Minor of Minor Insurance, for those of you who are
not minor insurance.
not
Sorry.
Minor Insurance, Minor Accounting.
Minor Gilroy and Mead. I know. I married the guy, but
okay.
You know,
Minor Gilroy and Mead
guy.
Accounting. She's our Northwest Illinois economic development accounting firm. So that's
Thank you.
she's
Thanks
not
for
just
the
Gloria.
plug. Thanks for the plug. All right. So about the unemployment, one of the major concerns was the one
This
that
is on
Deborah asked, which was great, is about the unemployment. If you have employees already filing, you bring them back, obviously, but do you know, because we keep not getting the answer to this, although Iowa has answered that through Workforce, will the employer's contribution rate go up by all of these people filing unemployment?
You don't know.
Have you heard of that? Okay.
I've heard the question asked. I think from what I understood from speaking to someone who had spoken to Andrew Chesney, the state representative for Joe Davis County, it seems like the unemployment, it would take an act of the state legislature to change that in Illinois right now. And it seems like the state legislature hasn't been meeting.
Okay, because Iowa Workforce did freeze the employer's contribution, and we've been waiting for several weeks to hear back whether they were going to do that. So once again, obviously the point is to bring the employees back. But if the employer is sitting there waiting to know if they're going to be approved for the PPP loan, then do they let their employees go ahead and file unemployment and bring them back?
It seems like that, because according to the PPP program, you have up until June 30th, 2020 to bring people back, qualify for it.
Okay.
If you've already let people go, or if you've let people go between March 15th and April 30th.
Okay. Also with the PPP loan, when it comes time to reconcile whether it'll be forgivable or not.
Yeah.
And when you're talking about a definition of utilities, we've been asked that question several times. Besides what you would normally think, we were able to read that it's not only, your power and gas, that it also includes the internet and telephone.
It does include internet, it does include telephone, water, gas, electricity.
Okay. All righty. And then with the IDL, the $10,000 loan, as you say, that's not as strict. And those would probably be the people that would not have payroll that would file for that.
Or minimal payroll.
Right.
Like my photographer friend who works down the street from where I live in downtown Stockton.
Right.
She doesn't take an income because
Sure.
her husband supports her.
Sure.
And
Sure.
her biggest expenses are rent right now.
When I filed for one of those for one of our clients, we see where there's at least a week delay. They said that they would notify us within a week whether it's been approved or not. Is that what you're finding out too?
A week, if not more.
Okay. And then on the PPP loan, once again, if you're a sole proprietor and you have wages, you're actually filling out 2 PP loan borrower forms, one for the wages, obviously, and the second one would be for the net profit of the sole proprietorship?
I don't know. I think they're trying to look at what you would pay yourself as wages, but this is something we'd have to ask the SBA. I haven't come across this just yet.
Okay, thank you. Okay, I'll shut up now.
No, I like these questions. I love having your accounting input because you're seeing even more clients than what I'm seeing.
Well, they're coming to us to ask for their payroll information, needless to say. So.
And what kind of payroll forms are you pulling for them, for those who?
What's been required so far are the 2019 W-2s, the W-3, the quarterly 941s, and the SUTA report.
So W-2, W-3, and then the what report?
The 941s. They're
Okay.
the quarterly 941s, and then the quarterly SUTA reports would be the IDES, the Illinois Department of Employment Security.
Okay.
Because those are paid, those are strictly expenses by the employer. And then, of course, what more there is what is outlined in your slide was about if employers have a retirement plan, 401k, those wages are, those amounts are included, as well as if they have a group health plan.
Awesome. Thank you for sharing this. This is really useful information.
We're learning as we go, every minute, because it changes, not just daily, as everybody knows on here. It changes minute by minute. So what was true before lunch is maybe not true after lunch.
Today seems like the first day where there hasn't been a bunch of rapid changes throughout the day, at least that I've seen, and it's kind of nice.
Right.
But, yeah.
Right.
All right. Thanks for the questions, everyone. This was amazing. Let's get back to the rest of the programs that we have. I'm going to share my screen again with you and get back to it. All right. Okay. So, in addition to the federal programs, it looks like that there is an Illinois Small Business Emergency Loan Program. This is up to $50,000, and this counts on October to December payroll. So if you're a small business in Galena that only has a seasonal workforce that's May through September, you're not screwed by this. There is an interest rate of 3%, which is awesome. It's lower than the SBA rate, and it's repaid over 5 years. It is intended to be used for working capital like rent and utilities, with 50% intended to be spent on payroll. But if you're looking at the economic injury disaster loan, you think that interest rate's a little high and your payroll expenses are more balanced compared to your rent and utilities, this is a really great option. And just like the hospitality grant program, the state isn't giving out the money. It's Axion Microfinance out of Chicago, which is a world famous micro lender that I have a lot of respect for. And I highly recommend you check this out if you're looking for another low interest loan program. Let's see. So how are you eligible for this? Basically, you need fewer than 50 employees, less than $3 million in annual revenue. You have a commitment to keeping or rehiring employees for 6 months. So assuming you received the loan April 15th, you would need to keep people on payroll through October 15th. And finally, while it seemed like pretty much every small business was eligible for the Paycheck Protection Program because the government just wanted to help everybody out, you must be able to show a 25% decrease in revenue due to COVID-19. So my restaurants are not going to have a problem with this. My retailers that are shut down because of this shelter-in-place order are not going to have a problem.
They're
with
telling like different loans and stuff that we can apply for or grants.
Demi, this is Emily with Northwest Illinois Economic Development. Can you mute yourself while we're talking about the Illinois Emergency Loan Program? All right.
I could have sworn she just said, "Dummy, can you get to yourself?"
I've muted. I'm going to mute you all while we continue talking. And then if you have questions, put them in the chat. And once we're done with the rest of these slides, we'll open it back up for Q&A. For those of you who are just joining us, we're about halfway through the presentation, and we will be posting a recording of the slide and the presentation online following the presentation. So the Illinois Emergency Loan Program, fewer than 50 employees, less than $3 million in annual revenue, a commitment to keep or rehire employees for 6 months, and you must be able to show a 25% decrease in revenue due to COVID-19. So if you're an animal feed store or an accounting firm that's bringing in the normal revenue because you guys are allowed to stay open, that people are asking a lot of help for you, you might not be eligible for this while you would be eligible for the Paycheck Protection Program. I think this is the most clear program for how much you need to be impacted, but that's just my opinion. I haven't had any clients apply for this, so I'm not quite sure how easy this application is or is not. Other funding sources at this point could be private grants. Northwest Illinois Economic Development posts these to Facebook as we see them. However, these are often first come, first serve. So by the time it gets up, by the time we do a presentation like this, the grants that were open yesterday might be closed. Like there's one from Verizon, for example, that's already closed. And then there's occasionally money from friends and family. I'm not saying you guys have this, but if you don't have any other funding sources and you're getting turned down from other funding sources, this is what Northwest Illinois Economic Development is seeing. Additional funding sources include, like, there's also the federal payroll tax credit for those of you who aren't claiming Paycheck Protection Program money. Basically, the federal government gives you 50% off your payroll. They'll reimburse you for it, assuming you keep employees on for 6 months. And the private grants. In addition, Northwest Illinois Economic Development also offers technical assistance. Due to the shutdowns, we've moved our Build It, Grow It small business class online for the duration of the shutdown. So as long as bars and restaurants are closed to in-person dining, we're not holding Build It, Grow It, and we've moved it to a Zoom call like this. So if you are enrolled in the Fulton or Galena courses, you will receive a Build It, Grow It link in your email inbox. If you have never tried Build It, Grow It, but want to learn about marketing, want to socialize with other businesses, we recommend you leave your name in the chat, and Erica, my assistant, will be able to email you the link for Thursday's class. This is the second and fourth Thursday of the month at 8:30. We're just starting the 5 disciplines of marketing, and we'll wrap with a pitch competition for $1,000 in seed money in October. Really great program. If you have questions about it, let us know. In addition, we also have private counseling sessions associated with Build It, Grow It, and virtual office hours with our office. Private counseling is done by our premier business consultant and business appraiser, Brian McIntyre out of Rockford. He teaches our Build It, Grow It class. And then Northwest Illinois Economic Development does do virtual office hours via Zoom to go through your financials with you, to talk about your different programs that you might or might not be eligible for, and just to talk about what's going on in life and business and anything else you may want to think about. We also like to talk about marketing, especially now when we're stuck at home or in the office without clients in the store. When things get good again, we want people to remember that you exist. That's really important to us. So even if you're not spending any money down at the Galena Gazette or at the Savannah Times Journal, even if you're not posting on social media very much, having a plan, having some posts, maybe getting some professional photography or iPhone photography or teenager photography done of your store or products and posting them online. It's especially a good time for that when the weather is nice, the light is good, and your store is quiet for once. And just because this isn't money, I highly recommend you use this time of quiet and slowness to work on the technical aspects of your business, to build up your online presence. And that you use this time of stillness to look at what options are right for you and your company, because not everything is right. And in the long run, we want to make sure that you're able to keep going as an entrepreneur. You are on this call for a reason. You have a business open for a reason. And we at Northwest Illinois Economic Development want to set you up for success, that your business and your life is where you want it to be, not just right now, but 6 months from now, a year from now, 5 years from now. Are you looking to get out of business in 5 years? Maybe think about retiring. Are you thinking about expanding into a new venture? These are all things you'll want to keep in mind as you consider what financial and what technical assistance you want to apply for. Finally, there are some things we want to consider before you apply for any money. First, how much money do you actually need? You might have some capital on hand or in the savings account or in a certificate of deposit, either personally or for your business. You might have some existing lines of credits like credit cards or through your bank. Additionally, given how many programs require payroll in order to get funds, you need to think about your ability to rehire staff that may be laid off and your ability to repay the loan or loans if you take out EIDL and Paycheck Protection Program. You'll also want to talk about your personal risk tolerance. How much debt do you feel comfortable taking on, given that we don't know how long this situation is going to last? And you want to think about the plans for your business, both short-term and long-term. There are a lot of businesses in our area that will want to retire, like normal people will in like 5 to 10 years, and that's okay. But as we think about what debt to take on and what programs we want to take advantage of, what technical assistance that we want to take advantage of to build up our business, we do want to make sure our business is in a sellable position, if that's our plans, or that we're well set up financially in case we want to add an Airbnb or we actually want to buy our building in a few years. All right, this is what I have for you with the presentation. What additional questions can I answer for you while I have you in front of me? We can talk about the PPP, how it interacts with the economic injury disaster loan. One thing I do want to emphasize is that you do not want to mix funds from both these sources. You do not want to apply for the loans to have them overlap or duplicate each other, because there's so limited funds out there that the government won't let you spend the same, won't let you duplicate money. And you'll want to open up separate accounts for each loan you get so you can more easily keep track of it, so that you don't get audited, that you don't have people coming after you in case something does happen. All right, I'm gonna unmute you all and y'all can ask me questions.
Emily, I have a question.
Yeah.
Hi, you guys.
We have the Savannah Historical Society, and we're in the middle of a construction project. And we were given some securities that have diminished in value, and we're trying to sell them. And we're looking for a loan to finish paying the contractors. So let's see, the economic injury disaster loan, you said could go up to 200,000 without personal guarantees?
Yes.
Okay, and then what is the maximum period that loan can be made for?
Up to 30 years. And that's up to the Small Business Administration, what they want to.
Okay. Now, if we have a current mortgage, they won't consider paying that off, would they? And taking a first position on the assets?
It doesn't seem so. They want you to pay your, that's not what it seems like, but I would reach out to the SBA with questions on that.
Okay.
Gloria, I'm gonna pull something up for us, and that should answer your question about the payroll, the employee retention tax credit. It is 50% of the first $10,000 for the first $10,000 of compensation. I'm pulling up the guide from the U.S. Chamber of Commerce Foundation to show you, and I can put a link to this in the chat so that you can pull it up. Is this helpful to you,
Great.
Gloria?
Yes, yes. Okay.
All right, I'll put this in the chat.
And when you do this one, as you mentioned before, then that is not, then you don't apply for the PPP loan, correct?
Yeah, basically this is for people who don't take advantage of the PPP. And for those of you who are watching this, I just copied and pasted the link for you all to this. The United States Chamber of Commerce has been an amazing resource during this. I just want to give them a shout out for all of their great communications. I've been relying on their stuff a lot. Any other questions that you all may have? Anything that we haven't answered yet?
If I want to grow a business, add employees, which of these programs might be most advantageous?
You don't.
We have no experience with employees. So let's say we want to add 3 part-time employees.
You can't use any of this for that. They're hoping to keep people employed. They're trying to keep people alive, not help any expansion. That's one of the things they specifically disallow. And for those of you who work with bars or restaurants, if the bar gets more than 33% of their revenue from gambling, they aren't eligible.
Okay.
Also, talk to your existing lender about the PPP program. I'm hearing a lot of things about banks being overwhelmed by them, so I'm not going to give out the names of anyone who's taking them or not taking them, because this has been changing by the day, by the hour. All right, anything else I can do for you? This went by quicker than what I had anticipated, so that's good at least. Chris, was this what you were hoping for?
Chris is muted.
I muted myself.
Yeah, was this what you were hoping for? Did this
Yes,
answer your questions?
Yep, this is exactly what I was asking for. So thank you so much for doing it.
Yeah. If you all don't have any other questions, I'm going to sign off. I'm going to be posting a link. I'm going to be posting this video on our Facebook page for Northwest Illinois Economic Development. So feel free to share this far and wide. And I'll be happy to post the slides, or if you want a copy of the slides, just send me an email and I'd be happy to distribute them and have you distribute these as well. Again, Northwest Illinois Economic Development is here to help however we can. And we do have virtual office hours, and people can book appointments to do something like this with us. I know at least 2 people have, okay, my phone's going weird. All right, well, thank you so much for your time. I hope you all have a wonderful afternoon. Have a great day.
Thank you.
Thank you, Emily.
Thank you.